SGLI, F-SGLI, VGLI, and there's even more acronyms in the government life insurance program. It's great group life insurance. Let's spend a few minutes unpacking that, talk about what happens when it transitions to VGLI, and an option that could give you more benefit at lower cost. I'm going to take just a few minutes to talk about all those different programs, the pros and the cons, how much you should be taking, and an alternative maybe for your family or for you after you get out instead of VGLI. Because if you don't know it, VGLI can become very expensive for a death only benefit. Hey, it's John. Just taking a quick break. Give you a little bit of my story. I'm a retired Navy EOD officer. You know, our motto was diffusing danger. So I've turned that into diffusing financial danger because I want to help you learn more about personal finance, whether it applies to all of us, whether it applies specifically to military and veterans. But this is just going to be an educational video. If you like this content, hit that like button, subscribe, especially leave a comment. That way I know I'm on the mark or maybe I'm missing the mark a little bit. So, hey, let's get back to today's topic. Let's jump back to the topic at hand today. I'm using an excerpt from a Military Money 101 financial literacy seminar that I taught just a few days ago. So we're going to watch that video. It'll explain more about some of your military financial benefits.
So, one of my favorite topics, Servicemen Group's Life Insurance, SGLI, and Veterans Group Life Insurance, VGLI. And this is where I'm going to wrap us up. So don't think I'm going to be going until 9 or 10. SGLI is about the best workplace life insurance program out there. E1s to our most senior admirals and generals get up to $500,000 at the same premium. It's about $26 a month. It goes up from time to time. Actually, it went down once upon a time, but it's $500,000 no matter if you're a brand new E1 to the most senior person in your service, you're paying 26 bucks. That's not how life insurance works. It's normally based on age and health and lifestyle. I mean, you can be, a Ranger, Delta Force, EOD, and I do know a guy that is one of those or was one of those. He would only pay $26 and he was doing crazy stuff. Or you could be a brand new E1 just finishing boot camp and you're still going to get that 500,000. There's also what's called family SGLI, which is for our families. It is a separate payment, but it's also very well subsidized. It's worth taking. And then there's this thing called traumatic SGLI, which means if you have a traumatic injury or a major medical diagnosis, they will pay out a benefit tied to the SGLI program. I hope you don't know about that and you heard about it tonight going, what's he talking about? That means you, your loved ones, and your friends have not had a traumatic injury. One of my friends did. He was hit on a motorcycle and he lived, but he did get a traumatic SGLI payment. The beauty of this is you sign up for that max amount, you pay that $26, then you forget about it until you or your family needs it or until you separate. Okay, that's what I would recommend anybody does. SGLI is also available if you're in the reserve and the guard. So that's a great benefit because they still have access to that SGLI 500,000. It does have an accelerated benefit if you get terminally ill. And if you're not getting the max coverage, you can go in, sign up online, and get that max coverage, no questions asked. You could have even had a very bad medical checkup today, and if you're still serving, you can still get the 500,000. That's not how life insurance works in the private sector. When you separate or retire, you do have the option to convert it to VGLI. The best thing is that's also automatic. It doesn't matter if you're filing a VA claim. It doesn't matter if you're being medically retired. You still can get the full amount that you had of SGLI as VGLI. But there are two problems with VGLI that kind of make me hesitant to fully recommend it. The first is VGLI, while it is subsidized, it's not as subsidized as heavily as SGLI. It's based on your age. Every 5 years, it goes up. Let's look at those ages when most people are retiring from the military. They're between 35 and 44, generally. At 35 to 39, VGLI would be $50 a month instead of $26 a month. 40 to 44, it would be $70 a month. So you already see that it's going up. And this is from the VA website as of September of last year. I don't think it's changed since then. As you age, it continues to go up in 5-year increments. You see it going up there. And when you get to be 60 to 64, it's $425 a month. Now, you still have the full $500,000 coverage, but we're starting to talk some serious money there, aren't we? We're starting to talk car payments. We're starting to talk about the internet and all the cell phone bills. We're talking a pretty good high amount of money. It's going to keep going up. 65 to 69, it's almost $700 a month. 70 to 74, it goes over 1,000. I don't know about you, but I'm seeing more and more of my peers that have VGLI canceling it. Now they don't have that coverage. They're in their late 60s or early 70s and they try to go get life insurance. If they haven't self-insured, it's crazy expensive. That's why VGLI is that high. Then it goes up one more time, or actually two more times. It goes up to almost $2,000 a month. That's the mortgage payment in some places, not here in Southern California, but that's a lot. And then it goes to 2,200 and you pay that in your 80s. I think at 90 they waive it, but many veterans don't make it to 90. That's where most people cancel it if they haven't already. Just facing facts, right? You're starting to pay $700 a month. You're retired by this point from your second career, third career, your entrepreneurial career. And you're like, why am I paying this much? Well, let's talk about one other issue. Again, SGLI and VGLI have a small terminal illness accelerated payout. But as we're going through life, we have our income above our expenses. And what happens is we have a major event. And I'm talking a major medical event. Think about it for just a moment. Somebody you know has probably had a heart attack, a stroke, or cancer in the last couple years, right? When that happens, their income drops and their expenses go up. Things like copays, deductibles, all the other bills that keep coming, even though they're now having a medical emergency and they can't work. And all those things happen, and right there, unimaginable debt gets created. Well, what if there was a way to turn on a income stream that kept the income line above the expenses line? That's what living benefits is designed to do. Well, living benefits will allow you to focus on the medical and emotional struggles of having one of those events instead of the financial events as well. And you can focus on your recovery. Well, that's what's called life insurance with full living benefits. There's over 700 life insurance companies in the US. Only about a dozen offer full living benefits. A lot say they do, but they're not the living benefits I'm about to show you that make up a true full living benefits suite. Let's say you have that same $500,000 reserve in a living benefits life insurance policy instead of VGLI. You have a critical illness or a critical injury. That's one of those major medical events like a stroke, like a heart attack, like a type of cancer that affects your quality of life but isn't necessarily going to kill you. You have a traumatic brain injury. You have third-degree burns over a certain amount of your body. You lose your eyesight, lose a limb. Those are all considered critical illnesses or critical injuries. You could accelerate up to 75% of your $500,000 reserve. You'd have $375,000, up to 375. A couple years ago, our co-founder was presenting this exact illustration. At the end of the event, a gentleman walked up to him and said, "Lyle, I really wish I'd met you 2 years ago because I had a heart attack. And I hate to say it, Lyle, but it would have been better financially for my family if I had died. We almost went bankrupt. We basically had to reset our financial footing because of my heart attack." That's how massive these medical emergencies are. The next is if you have a terminal illness. You may think of this as you go to the doctor and they give you that chat that none of us like to hear. "John, get your affairs in order. You have 2 years or less to live." We had a client a number of years ago. She was a single mom, 29 years old. She had two little girls. Her mom had died when she was a teenager from breast cancer. Her dad had died in an accident a few years before that, and she was battling breast cancer herself. She and her doctor tried everything. They used up all of her medical insurance, and he said, "I'm sorry, you need to get your affairs in order. You're terminally ill." Unfortunately, she was it for those two little girls. Mom and dad were out of the picture. They had already passed away. Their father was out of the picture. Don't know what happened to him. But, she said, I got to make sure my life insurance is in place. Through her tears, she called her agent and he said, she goes, I can't get this experimental treatment that works for my form of breast cancer because I've expended all my medical benefits. And he said, well, you can pay for it yourself. And she says, what are you talking about? I'm terminally ill. He goes, don't you know that you have a terminal illness benefit? She accelerated $100,000, got the, oh man, I'm choking up, accelerated that benefit, got the treatment. It saved her life. That is life insurance. A few years ago, she walked one of those girls down the aisle. To me, that is the true power of life insurance, right? The last one is if you have a chronic injury or illness. That means you can't perform two of the six functions of daily living, or you're suffering from dementia. Daily functions of living basically is all the stuff we take for granted being able to do as adults: feed ourselves, bathe ourselves, all those kind of things. If a doctor says you can't do two of those, or you have Alzheimer, Lewy body dementia, those kind of mental problems, you can accelerate 2% a month. That doesn't sound like a lot compared to 375 or $450,000, but that's 2% a month every month for 50 years. In this case, that would be $10,000. It would come directly to you. You could pay for in-home care. You could pay for facility care. You could pay for modifications in your house. The great thing is these all come to you tax-free. You can use them for whatever you want, and you never have to pay it back. And remember the tax-free retirement strategy? If you grow that money inside a life insurance with living benefits plan, you get that feature too. You get tax-free growth. Now, the beauty of this is if you structure it properly and if you qualify, it can save you compared to VGLI plus getting these benefits. It saves you $1,000 or more per year over that 20-year.
Thanks for watching. Again, if you found something that you liked, leave a comment, hit that like. That'll tell me I'm on the right track with these videos, and all the best.